NQ24900. Liquidity valve activated. Now that record Korean sell-off you're seeing, it's not a panic. It is a mechanical de-risking. And the real signal, the KOSDAQ decoupling, confirms that smart money is already rotating ahead of the US PPI data.
And there it is, 6.8 trillion. That is the shock number, a record foreign liquidation hitting the Korean market. Now, the headlines are going to scream panic. We're not going to do that. We're going to see it for what it is, a data point, a vector. So you'll see the KOSPI close down, you see the giant Samsung and SK Hynix taking a hit. This is pure noise, a total distraction. They weren't sold because they're weak. They were used as a liquidity valve, a cash machine. Global funds needed dollars, and this was the fastest way to get them. Okay, let's get into the investigation. This is the logic vector. We're connecting this agent signal directly to the Nasdaq 100 open. Time to find the real signal in all that noise. To do that, we're engaging the Canary protocol. The mission is simple: isolate the true signal from the headline chatter. And here it is, the critical divergence. The KOSPI, weighed down by heavy liquidation, is down a full %. But look at the KOSDAQ. It actually closed positive. See, this isn't a sell-off, it's a rotation. The money is flowing out of the big index names and into the key supply chain nodes, the upstream alpha. That's the smart money trail. So what was the trigger? A simple proxy hedge. You see, the rising USD/KRW exchange rate acted as an automated tripwire. The correlation between the won and the Nasdaq 100 is incredibly high, with a rho of 0.85. When the currency moves like that, automated systems are programmed to manage risk in the primary asset, the Nasdaq, by selling the proxy. And today, that was the Korean market. You should think of the Korean market today as a giant liquidity sponge. It just soaked up all that pre-market selling pressure for US technology. That outflow, that was simply the cost global institutions were willing to pay to de-risk their books right before the US PPI data drops. It's just a calculated expense. So this brings us to the central conflict we're facing right now. The supply chain, the KOSDAQ, is flashing a clear bull signal. But the FX and the foreign flow data, they're screaming bear. And that conflict, that's what is going to decide the open. Okay, analysis complete. Now for the battle plan. We are shifting to execution strategy. The prime directive is simple. Do not trade the headline. You trade the supply chain. These are the NQ tactical levels. Entry is authorized above 25,250, but only on PPI data that comes in below 0.3%. Our hard exit is a close below 24,900. Any trading inside the chop range between 24,581 and 24,900 is an invalidation of the immediate long thesis. In that zone, cash is a position. Stand down. Command mode is active. Watch the Nasdaq 100 futures. Wait for the PPI data release. Enter only on recovery confirmation above 25,250. Exit all tech longs if 24,900 is breached. Invalidate the entire thesis below 24,581. Confirm rotation if the IWM breaks above. Cancel rotation if the IWM breaks below. And preserve capital if volatility spikes. Execute. Final checklist. Pre-market confirmation is next. The final check is pre-market volume. Your pivot is 24,900. If volume comes in and defends that support level, our thesis is confirmed. If heavy selling volume breaks 24,900, the long thesis is invalidated. It is that simple. Extraction. Time to log the results. Log the results at 0630 EST. No exceptions. The plan is set. Now it's about execution.
The valve is open. Now we find out, is this a controlled release or is it the start of a flood?